Quiet now, everybody. Quiet, listen to me. We're going to start a show. Now, some of you people have been with me before. You know it's going to be a tough grind. You're going to dance until your feet fall off. You're not able to stand up any longer. But we're going to have a show.
Welcome to the Pink Door Podcast.
We are back with the deep dive.
And today we are really pulling apart a critical set of data for the Hingham, Massachusetts residential real estate market. We're focusing entirely on what happened in December 2025.
Yeah, and our mission today is to figure out this central tension we're seeing.
Is Hingham finally cooling off from its blistering pace, or is this winter slowdown just, a temporary window of opportunity?
It's the perfect time to ask that question. December is, traditionally the start of the slower season.
Right.
But what we found in the source material is fascinating. Hingham remains, without a doubt, a seller's market based on the long-term supply.
Okay.
But the short-term, month-over-month data shows these significant, almost violent shifts in market speed and pricing power.
Violent is a strong word.
Well, buyers managed to tap the brakes, and they tap them hard in December. We really need to understand exactly where and why that happened.
Okay, let's unpack this immediately. I want to start with the supply side of the equation.
Good place to start.
This is the metric that tells us, who the market favors. We're talking months of inventory, or MOI.
Mm-hmm.
For December 2025, the figure for all residential properties was 0.97 months. I mean, that is astonishingly low.
It is. It just confirms Hingham's status as a super tight seller's market.
Right.
And just for context for everyone listening, a balanced market is somewhere between 4 and 6 months of inventory. We are sitting at less than 1.
So if nothing new was listed tomorrow, Hingham would be, sold out in under 30 days?
Pretty much, yeah.
That structural shortage is what keeps values high.
Right.
But here's where we see the dynamic shifting. That month of inventory figure actually saw a huge month-over-month increase of nearly 45%.
A 44.89% jump, to be exact. It's a massive spike.
So what does that suggest? A jump of almost 50% in a single month? Is this just the holidays or something more?
Well, it suggests two things are happening at the same time. First, you have motivated sellers trying to list before the year ends, maybe thinking 2026 will be slower.
Okay, that makes sense.
But second, and I think this is more important, it confirms a severe deceleration in the absorption rate. The market just isn't eating up new supply as fast as it did in November.
And that deceleration has to show up somewhere else, right?
It absolutely does. You see it confirmed when you look at the pace of sales or, how long properties are sitting on the market.
Let's go right there. The pace metric, let's call it median time on market. How long are properties awaiting to go under agreement?
The median time for all active and pending properties in December was 25 days. Now, here is the headline fact buried in that speed data. The 25 days represents a dramatic month-over-month increase of 92%.
Wait, 92%?
92.31%. Properties essentially took twice as long to find a buyer in December compared to November.
Wow. So that is buyers flexing their muscle and refusing to jump on things immediately.
That's exactly it. It's an instant market reaction. Buyers are still active enough to keep the overall supply low, but they are clearly taking longer to commit.
So if I'm a seller, I see that, and I start to panic about waiting 25 days.
And this is where we have to introduce this concept of the Hingham market's, let's call it a dual reality. This is probably the most critical insight for anyone listening.
A dual reality. Okay, what do you mean?
That 25 days is the average for all inventory, right?
Mm-hmm.
Including properties that have been sitting there getting stale.
Right.
But if we look specifically at the short-term data, the properties that successfully closed in the last 3 months, the median time on market for those quick successes was only 13 days.
Ah, okay. So if a property is priced right, presented perfectly, it's still gone in 2 weeks.
Gone.
But the average is getting dragged way up by the houses that are just sitting there for 60, 90, 120 days.
Exactly. I like to think of it like a high-end restaurant.
Yeah.
The well-reviewed, perfectly executed dishes, they still fly out of the kitchen in 13 days, often with a premium paid.
Right.
But the chef's ambitious, maybe slightly experimental new dishes, the ones that are overpriced or need some work, they're sitting under the heat lamp, and that raises the overall wait time for everyone else to 25 days.
And that massive increase in the overall wait time proves that the proportion of houses just sitting is growing a lot.
Dramatically.
Okay, that contrast is the key takeaway for speed. Let's follow that trend to where it shows up most dramatically. Money. Speed usually follows money, right? How did this buyer resistance actually show up in the pricing data?
It showed up immediately in the median sold price, or MSP. For December, across all residential types, the MSP was $1,308,500.
Which, still sounds very high, but the swing here is what's dramatic. That's a short-term decrease of over 16% month over month.
16.26%.
Does that mean a seller who closed in December literally lost $200,000 compared to one in November? Or is it more about what kind of properties sold?
It's mostly the latter, but the momentum shift is very real. That 16% drop is partly seasonal. We see fewer huge luxury homes close in December.
Sure.
But it's also proof that the properties that did sell were closing for a lot less than the ones that closed the month before. And crucially, buyers had more leverage in negotiations.
How so?
The average sold to list price percentage fell to 96.2%.
Which means, on average, buyers negotiated 3.8% off the final list price. That is a big change for a market that's been used to everything selling at or above asking.
It's a 2.1% drop in that percentage from the month before. If you were a buyer in November, you were likely paying list price. If you were a buyer in December, you were getting a discount.
So I'm listening to this, I'm thinking Hingham home values are tanking because of that huge short-term drop. How do we square that with the long-term stability the town is known for?
That's where you have to zoom out. We look at the median estimated property value for the town, which is a model based on public records and MLS data.
And what does that say?
That median estimated value is $1,304,640, almost identical to the actual sold price. And the change on that long-term model was tiny negative 0.2% last month.
So basically flat.
But here's the critical number.
Yeah.
The 12-month change for this estimated value is actually positive 1.4%.
So the foundation is solid. The fundamental value and long-term growth of Hingham property is still there, despite all this December drama.
Correct. Hingham is still growing in value year over year. But if we connect this to the bigger picture, say a 24-month perspective, we uncover the major tension that's fueling this slowdown.
Okay, lay it on me.
Over the last 2 years, the median list price has just exploded. It's up nearly 57%.
57%, wow.
Yeah, from about 1.4 million to almost 2.2 million. Now contrast that with the median sold price, which increased only 19% over the same 2 years.
That divergence is just staggering. Sellers are listing 57% higher, but the market is only closing 19% higher.
Exactly. Sellers are still living in that peak frenzy of 2021-2022, raising their price hopes by almost 60%. Meanwhile, the actual transactional market has only absorbed an 18 to 19% increase.
And that disconnect is what's causing the massive slowdown in days on market.
It's the whole story. Sellers are saying, I want 2.2 million, and buyers are replying, I'll pay 1.3, and I'm going to wait until you meet me halfway.
Okay, that's a perfect transition. Let's bring this data to life with some specific examples from December. That median list price for active inventory is still way up there at $2.195 million.
It is, and it confirms that high seller ambition. We saw 10 new listings in December, and you can see it right there. Look at the 2 high-end twin listings at 2 Black Rock Drive.
Right, one's a single family, one's a condo.
Both hit the market at the same time for just under $4 million each. Pure examples of that high-end aspiration.
And then looking at the pending activity, the stuff that went under contract, we saw 10 properties all across the board, from a $450,000 condo at 16 Beals Cove Road up to the multi-millions.
Yeah, and the high end there is so revealing when we talk about that dual reality of market speed.
You're talking about the big one that went pending.
The home at 86 Black Rock Drive,
Mm-hmm.
listed at $5.1 million. What's crucial is its time on market, 234 days.
Almost 8 months to find a buyer.
It eventually found one, but that required extraordinary patience from the seller. That's the price you pay for, well, ambitious pricing.
Let's look at the closed sales, because that's the final reality check. 16 single-family homes sold in December. What were those final numbers?
For single-family homes specifically, the median closed price was $1,313,500.
And the median list price?
Was $1,380,000. So even just looking at single families, The median sold price was below the median list price. It reinforces that negotiation leverage buyers have now.
And yet, even in that closed data, we still see bidding wars for the really desirable properties. It's not like everything is slowing down.
Oh, absolutely not. The perfectly priced inventory still moves instantly and gets a premium. Take 25 Rockwood Road, that mid-century modern.
I saw that one.
It's been only 13 days on the market, confirming that fast reality we talked about. And it sold for $1.51 million on a $1.349 list price.
So it sold for a premium of almost 12%.
An 11.93% premium. That's a bidding war. It's a clear example of competition for homes that have that exceptional perceived value.
And that quick premium sale contrasts perfectly with the patience needed for the really high-end stuff.
The perfect contrast is 93 Main Street, a beautiful 6-bed colonial. It sold for $4.1 million, but only after spending 191 days on the market, over 6 months. And it sold for less than its $4.3 million asking price.
So there it is. December proves the market is split. Instant bidding wars for perceived value and months of sitting for properties priced at the top of that aspiration curve.
That's the whole story in Two Houses.
Now, before we get to takeaways, we should briefly touch on the distressed market. The source material noted 4 distressed properties in the last 3 months. It's a small number, but why is it important?
It's a tiny fraction of the market for sure, but we track it as a leading indicator of, potential economic stress. These were things like newly filed complaints and specifically a notice of foreclosure sale for 5 Fulling Mill Lane.
So what does that mean for a buyer?
In a market like Hingham, 4 instances means nothing statistically. But the filing of that foreclosure notice is a technical trigger. It opens up an opportunity for buyers with specialized capital or, the ability to handle a really complicated transaction.
So it's not a flood of inventory, but it's a very specialized opportunity for sophisticated buyers who are watching for those exact stress points.
Precisely. It's a niche within a niche, but it's worth knowing it's active.
So wrapping this all up, what does this mean for buyers and sellers in Hingham heading into the new year? Can you translate these numbers into some actionable insights?
Sure. December 2025 really delivered a high contrast picture. Long term, Hingham's fundamental value is stable. It's growing. It's an excellent investment.
Right. The foundation is solid.
But short term, the transactional market hit the brakes. Buyers became sharply more price sensitive, and you see that in the 92% jump in time on market and that 16% drop in the median sale price.
And that dual reality is the key.
It's everything. If you're selling, your price has to be impeccable, or you risk sitting for months. You have to be honest about where your property falls on that spectrum.
Is it a 13-day house or is it a 191-day house?
And this raises a really important question for you, the listener, to consider as we look into 2026.
Go on.
How long can Hingham's tight supply, which mathematically keeps prices high, continue to battle the increasing buyer resistance to those very high listing prices? The data is conclusive. Aggressive pricing will continue to risk significantly longer market times. Buyers won the short-term speed war in December, and they did it by forcing sellers to wait.
If you have any questions about this episode, or if you are thinking about buying or selling a house anywhere on Boston's South Shore from Southie to Sagamore, give Jim Aldred a call. He would love to speak with you, and he wants to provide you with the guidance and security to help your family move on smoothly. Thanks for listening, and see you next time on the Pink Door Podcast.